like kind of the perfect storm here, where the connection to the banking system in the United States seems to be, evaporating, and the actual ability to make markets seems to be under pretty significant pressure there as well. Hello, and welcome to the Crypto Brief, a podcast from the Fidelity Center for Applied Technology. Every week, we get together to discuss current events and trends in blockchain technology, tokenization, DeFi, NFTs, mining, and related aspects of the crypto ecosystem. I'm your co-host, Ryan Stubbe, Director of Bitcoin Mining, and I'm joined by Jason Ward, Head of the Blockchain Incubator, Parth Gargava, Product Architect within Fidelity Labs, and Jack Newrider, Research Analyst with Fidelity Digital Assets. Before we begin, just a friendly reminder that this discussion is for educational purposes only and should not be viewed as investment advice or a recommendation for any security or asset. The views expressed are those of the co-hosts and not necessarily those of Fidelity Investments or its affiliates. As we all know, digital assets are speculative and highly volatile and are only for those investors with a high risk tolerance. So let's dive into what's been happening recently. Good morning.
Hey, how are you guys doing? Did you have a good weekend?
Pretty good, yeah. How about you?
It's good. Big week in our house. We had a graduation, so happy to be on this side of the equation.
I know. That's it's always a little nerve-wracking leading up to that, isn't it?
My God, it was like a ridiculous math problem and trying to sequence all the different activities and who needs to be where, what needs to be done at what point in time. So
that's exciting though. Congrats to your son.
Thank you.
And we don't have Parth this week. He's away at the Cornell's IC3 boot camp. So looking forward to kind of hearing about that when he's back in a few weeks. So I think let's just jump right in. There's last week was a very, very busy week in the crypto news sphere. Of course, if you've been even loosely paying attention, two very notable enforcement actions taken by the SEC. One earlier in the week against Binance, and then the day after against Coinbase, and just a huge amount of information coming out around those different complaints. And you're starting to see kind of the in the early days, portions of the industry, different exchanges and companies taking certain actions to kind of hedge against what some of the perceived risks are as a result of these suits. So we'll dig into kind of what the complaints are, and then maybe talk a little bit about again what the ripple effects have been, and then maybe if we have time at the end, Jason, I'd love to get your thoughts around some of the proposed legislation that we saw come out last week, which of course was really interestingly timed again with the complaints that were filed. So I think just let's go chronological. So maybe let's start with Binance. So Jack, do you mind just giving us an overview of what the complaint against Binance is and what it contains?
Yeah, certainly. And like you said, these are kind of the two stories that are driving crypto markets right now. Both of them centered around actions taken by the SEC. So the SEC filed 13 charges against Binance entities and their founder, Changpeng Zhao, CZ, as everyone calls him, on June 5th. So that'd be last Monday as we're speaking currently. Remember back in March, the CFTC brought a series of charges against Binance. Now we're seeing the SEC step forward with charges against Binance and CZ. The list, it's quite exhaustive, but it kind of includes what I would look at as sort of two categories. And we're going to get to Coinbase as well, as that was the follow-on. I think that was Tuesday of that week. So it's sort of back-to-back dominoes from the SEC. But there's two categories for Binance that these charges fit into. One bucket was more around, offering unregistered securities. So I'll go through a little bit of the list. Unregistered exchange, broker, and clearing agency was one of the allegations. The offering of unregistered securities, that included BNB, BUSD, so their native token and their stablecoin that they were issuing that has since paused, that was created with Paxos, their lending platform as part of that sort of allegations of potential unregistered securities. And then there was also sort of a subset of things that applied only to Binance here in this case, which was around the misappropriation of funds and accusations that funds that were held by Binance US were then potentially siphoned off to trading entities, which CZ was the operator of, things that kind of look like FTX had been partaking in. Potentially the SEC is saying that Binance might have been doing or has been doing. And so now at the moment, we're kind of left wondering, because of the seriousness of these allegations, I think some people are saying if you add up CFTC and the SEC both going after Binance, could we potentially hear from the DOJ because of the seriousness of these offenses? I don't want to allude to the idea that we know anything's coming or not. But again, if you look at some of the allegations, they do look like potentially, that could be something that we hear in the future. And then it just kind of like analyzing or looking at the market right now, I checked Glassnode just before we got on here. Bitcoin balances are down 5 to 6% over the past week and a half on Binance. So down a little bit, but overall, kind of surprising that we're still seeing the vast majority of assets on Binance.com, still being held there. The BNB token is down 25% over the past month. Nearly all of that is in the last 10 days. And I think this is really that's kind of the signal to watch at the moment, is what happens with BNB and what's developing in this situation. At the moment, it doesn't appear all that great, right?
Yeah, and thanks for the summary there. I think just a few other things that kind of have really stood out to me as well is, since the complaint was filed, we did see Binance US come out and say that, they were suspending US dollar deposits, and that if you wanted to get, your, again, fiat off of the platform, over bank transfers, that you should do it immediately, because, their banking partners in the United States were moving to sever their relationship. So I think that's obviously really telling. We've also seen them, I think you maybe alluded to this with BUSD and BNB, but we've also seen them delist several other trading pairs, again, since the complaint was filed. And I'm curious also to get your thoughts. I know this is maybe a bit contested, but it's looking like liquidity on Binance US is down almost 78% since last week, with a number of large market makers moving away from the platform. So again, it's like kind of the perfect storm here, where the connection to the banking system in the United States seems to be, evaporating, and the actual ability to make markets seems to be under pretty significant pressure there as well.
Yeah, there was a period of time last week where the price of Bitcoin on Binance and Binance US specifically was trading at quite a large premium to, other spot exchanges, Coinbase, for example. It was a meaningful percentage. And usually what you would see, if it was a healthy market, is market makers would arbitrage the spreads across these exchanges. I mean, this goes all the way back to 2016, 2017. Things were super inefficient. And then all of these market makers stepped in and sort of increased the overall efficiency, such that spreads across exchanges or pricing is relatively decent in crypto markets. And now you're seeing trouble in paradise, so to speak, for Binance. And then nobody wants to step in and arbitrage that. It's a sign of, like you said, some of these market makers stepping away and thinking the reward is not worth the risk there.
The risk, yeah.
I think if you look beyond even Binance US, there was reporting done by CoinDesk that a group called High Block Capital runs a global bid-ask indicator. And that metric, which essentially looks at the resting bid and ask orders for about 1,100 coins worldwide, fell by 20% across the spot market. So definitely a pullback on liquidity in action. But I have to say, one of the things that I had heard on the radio previously and had read in a few different articles that is, I think, probably going to be a challenge for the Binance team, is that back in 2018, their compliance officer had expressed some concerns about their operations maybe being interpreted as an unregistered securities exchange. So it's one of those situations where there's a lot of information out there. Since this was being reported on some months ago, it's not surprising to see it referenced in the current suit.
Yeah, and so I think that's a good segue then into the second big news story of the week, which is the SEC taking action against Coinbase. And so this was really like a 1-2 punch. I think the market was still assessing and reeling somewhat from the Binance news. And so the SEC's action against Coinbase, there's definitely some similarities, but there's also some differences. So I think there's like 3 key areas, right? The first, Jack, to your point, was around kind of market function. And so the SEC is saying that Coinbase acts as a broker, exchange, and a clearing agency, consolidated into one entity. And these are traditionally segregated functions in your kind of traditional financial market structure. But they all, under securities law, require registration with the SEC. And so that's really the first, I would say, allegation is that Coinbase has been kind of fulfilling these 3 roles, and that they never registered, as any of those entities with the SEC. The second, which is not super surprising based on the Wells notice that the SEC served Coinbase earlier in the spring, is around their staking offering, right? So again, this language was kind of already in the Wells notice, saying that their staking as a service offering constituted an unregistered security. And I think Jason, you dug into the complaint specifically. What was the language that the SEC used on this?
Yeah, so it was reported by CNBC that the SEC language noted that in this staking program was a way for investors to earn financial returns through Coinbase's managerial efforts. So looking back at the Howey test, are you expecting an increase in value as a result of others' efforts? And they did say that 5 of the assets, stable assets, were potentially securities under their interpretation of the law. So I think it's important to delineate. This is not talking about the act of staking being something that is not acceptable. It is seemingly looking at the fact that the participants in the staking program were being advantaged through the efforts of others. So
that there was some other value being able to be abstracted by participating in the Coinbase staking service offering versus solo staking, which is staking your own assets.
Yeah, I think that's right. And then candidly, you have to ask the question, does this apply to any infrastructure provider? I think the answer is we'll have to wait and see. My gut instinct is no. It probably depends on how that particular offering is structured.
Yeah. And then the final charge, again, aligned somewhat with the Binance complaint, was just around some of the assets that are listed on the Coinbase exchange. There's a list of 13 assets that the SEC has now explicitly said they believe are unregistered securities, which include Solana, Polygon, Cardano, and several others. And I think it's one thing to note, just speaking to the ripple effect here, Robinhood has since come out and said that they are actually delisting those 3 assets, pretty much with immediate effect. I think you have until closer to the end of June to either TOA those assets off of Robinhood if it's available to you, or to liquidate them. Otherwise, they're going to liquidate it and basically credit your account. So I think that's a pretty notable, maybe not terribly surprising development, but maybe more clarity than we've ever had around some of these assets, as to the SEC explicitly saying, no, we think these are securities, right? And I think this is a piece where it will be really interesting to watch how the market reacts. And again, Robinhood taking very early action, but I really doubt that they are going to be the last.
So Ryan, I thought you were trying to make a very funny pun on the ripple effect because of the ongoing lawsuit between the SEC and Ripple, but I see you were
I'm not that cheeky, but I appreciate the compliment.
But I decided to quickly check to say I thought Coinbase delisted Ripple some time ago, and it does appear that was the case. So, unintended good choice of words there.
Ryan, you mentioned watching the price action following some of these announcements, and over the weekend, can't remember if it was Friday night, Saturday night, I think it was Saturday night, everything that wasn't Bitcoin and ETH was down like 20-25%. Part of that might have had to do with some of the liquidity being pulled on these exchanges like Binance that helped support some of the liquidity in these tokens. And if people were trying to sell and there wasn't enough marginal liquidity, then you do see prices have to reset. Another thing I'd mention is, Ryan, you said some of the tokens that they've alleged are securities in these two cases. Some of them are the same across Binance and Coinbase. Some of them are different. But one notable exclusion, of course, is Ethereum was not listed explicitly, right? It was listed in the Coinbase suit under the the staking program that they have, but I think that was more specific towards the staking program and its design rather than Ethereum on its own. And I don't know if either of you have a take here. Is it the result of the SEC capitulating on Ethereum as a security, or is it more so just, hey, that's a meaty topic that we think some of these things are more likely to be deemed securities, so let's just leave that one to the side. I don't know which one of those it is, but for Ethereum, some were viewing that as kind of a small win in a sea of rough waters.
Jason, I'm curious to get your thoughts on this, but to me, it feels like we've had no clarity around some of these altcoin assets, whereas the SEC has come out and sufficiently decentralized, quote unquote, right, and indicated that they didn't believe at a point in time that it was a security, ETH that is. But I think recent actions, Jack, have kind of cast some uncertainty on that point of view, because they have listed in certain lawsuits Ethereum as potentially being a security, and there hasn't been any really, again, material guidance to indicate, if their line of thinking around this issue has changed, right? So I think because they've come out and stated, that it's one way, it's kind of maybe a little bit harder to unwind, right? If their point of view on this has changed. So I don't know if we're, I think, the market's reading this as, a largely positive thing, but I don't know that we're necessarily out of the woods on that particular issue just yet.
So I agree with you.
And that's the skeptic in me.
Well, I think there's some positioning that's gone on. And Jack, specific to these particular cases, it may be that they feel strongly that they don't need to pull that in because they've got strong enough arguments for the other tokens. But it's important to note that the SEC tried to have the documents related to Bill Hinman's speech about sufficiently decentralized sealed in the Ripple lawsuit. And the federal judge overseeing that suit basically came out earlier this year saying that the SEC cannot seal those documents. So I think that on the ongoing perspective, people view, and I say broad brush, people view Ethereum as a commodity, in part because of the prior communications from an SEC official. Now, what I think is also kind of telling, and Jack, I know you follow these metrics quite a bit as well, is that in the wake of the, we'll call it sell-off of the weekend associated with the illiquidity, the Bitcoin and Ethereum dominance rose to 47.7% for Bitcoin and 19.9% for Ethereum. So I think that reflection of nearly 1/5 of value being placed in Ethereum is an expression of confidence from the market and the participants in this crypto ecosystem.
It's a great point, Jason.
Yeah, totally agree. I mean, there was clearly two assets that, excluding stablecoins, of course, there were clearly two assets that behaved differently from nearly the rest of the market. And they were the two largest, each having their own kind of unique use cases and network effects. I mean, these are things that, we kind of constantly talk about as Bitcoin and Ethereum being the two kind of decentralized ecosystems that have real networks of users.
Yeah. And as you can, imagine Coinbase coming out very strongly against these charges. I think, their chief legal officer, saying that they are basically going to operate business as usual until there's, there's some outcome in this lawsuit, and kind of echoing comments that we've heard from Brian Armstrong that, this type of approach to the space is long-term going to really have a negative impact on, America's, leadership role as an innovator in this space. And Brian Armstrong, I think, again, because these lawsuits came out so close to one another, Coinbase may be looking to put a little bit of distance between the charges against Binance versus the charges against them, just given, again, as we've covered, the kind of pretty significant differences in some of those charges, right? And I think Coinbase is gearing up for a very significant battle, right? And I'd be curious to get your takes on this. It's seeming like this could drag on for quite some time, because it's clear to me that Coinbase is not prepared at this point to back down, and that they're going to fight this.
Yeah, Jack, if you don't mind, I got some thoughts to share on this that I've been thinking a lot about. So first, I think the timing of the two lawsuits was intended for maximum effect. Day after day, drop the more serious Binance one first and try to essentially say, oh, and Coinbase doing the same things, which they're not. Some of the things are appear to be similar between the two lawsuits, but as Jack pointed out and you pointed out, Ryan, they're very different when it comes down to the details. So I think there's a bit of an intent to maybe sway the court of public opinion well before the adjudication of these cases will take place, which I think is going to take years. We've seen people pushing offshore. Coinbase has talked about moving offshore in order to have a more productive regulatory environment for their operations, as have others. Michael Casey from CoinDesk put out a great article basically saying the SEC is declaring war on crypto in the US. And he's talking about all these other nations that are attracting talent and capital right now because these firms are more willing to take the cost of moving overseas in order to have the benefit of the regulatory environment in clarity. But I do think that there's a lot of I'll call it metaphors being thrown around. And I was telling you guys the other day, I was listening to the radio and I heard people saying, well, one argument is, Coinbase, they went through an SEC review when they brought their equity shares public. So the SEC had a chance to dig in and really understand this business before they gave the green light to have those shares trade publicly. And then the counter argument I heard, which was kind of interesting, is, well, the SEC, they also approve trading in public lawnmower companies. They don't vouch for the lawnmowers product. And I thought it's kind of a shallow argument. I mean, the reality is there's a higher level of due diligence I think you would put into a financial services company. Again, my own personal perspective, I'm not a lawyer, don't know exactly the rigor that they went through. But what my opinion is that the SEC had ample opportunity to state challenges or things that they thought were possibly not compliant with Coinbase, with that exchange, before they allowed it to go trade public.
Yep. Yeah. And your comment around, companies leaving the United States, I think another notable kind of effect from this is, Mike Novogratz from Galaxy Digital coming out and saying that they're going to look to push more of their personnel overseas as they look to grow their business outside of the United States. I think Crypto.com also coming out and saying that they're discontinuing their institutional offering in the U.S., citing lack of demand, but also saying that that's driven by uncertainty in the market. So I think these are very material examples of what can happen to an industry or to an ecosystem when there's such a high degree of uncertainty and fear around what could possibly go wrong from a legal perspective. So this piece of it will be really interesting to watch, right? Like we've even seen Coinbase leading up to this complaint, starting to diversify their business and set up shop, overseas. You'll largely, as what we I think reported on at the time was, a hedge to some of this regulatory uncertainty, and now we're seeing that, maybe that was necessitated to a certain extent, right? I don't know, we don't know what they knew, but nonetheless, I think it'll be interesting to see how these firms are looking to grow their businesses and where they're doing it in the face of kind of, Jason, to your point, what is probably going to be lack of clarity for quite some time.
At the end of the day, like despite many finding the current approach from regulators to be rather frustrating, it does feel like we're starting to push into the territory where it might take some time, but we'll get more answers. And ultimately, that regulatory clarity is a huge missing piece to allowing, and the whole thing we always talk about, real world assets finding their way on chain. It makes a lot of these things more useful. The ability for institutional capital to actually allocate, because now there's a wider set of standards around how custodians and exchanges should be interacting, and these offshore platforms, and clarity around stable coins, like all of those things. It feels like it's coming. It's probably still going to take longer than we all want it to. But at the end of the day, that's what gets us to on the other side, theoretically, of allowing, the larger pools of capital that really aren't there yet because all of this stuff is happening.
And Jack, I think you're right. And I'm thinking back to one of our earlier episodes, and I have this mental image that, we're in the crypto marathon right now, in the regulatory marathon. And let's hope that this is our heartbreak hill and we get over that and then we sail back down to Boylston. But I think the really important thing to understand is this industry is very center right now in the political arena, not just because of these suits, but I think the urgency around taking action from a legislative perspective has increased because of the SEC actions. And, when I think about that, the broad brush term we use often, regulatory uncertainty, I'm guilty of it as well. But I think what we're really talking about is having some more specificity around how this new type of asset fits into existing regulations or where there are gaps. And one of the things that I was interested in was that last week we saw a draft proposal from Representative McHenry, who chairs the House Financial Services Committee, and the Agricultural Committee Chair, Glenn Thompson, called the Digital Asset Market Structure Proposal. And within that draft bill, again, draft being emphasized repeatedly, they are looking to help clarify how to classify assets as either a security or a commodity. And they're talking about basically a I don't want to call it a sandbox, but sort of a moratorium on enforcement actions until these rules can be worked out. But I think this type of safe harbor would be very beneficial to allow for maturity in the industry, but also, frankly, maturity in the understanding of the policymakers and their staff who would be responsible for helping to try and provide that clarity we're seeking. And again, think about Congress gives oversight powers and controls of the executive branch in terms of like the SEC and other regulators, CFTC. I think it could be very constructive to advance the dialogue. Now, how quickly it moves is definitely something we don't know. And we're coming into a presidential election cycle, so that can be challenging as well. But they're really talking about how broker-dealers could take custody of crypto assets, which is already being discussed. They're also talking about doing studies around DeFi and NFTs that might come with clarity a later point in time, but really thinking about how we can improve the current structure where you have some oversight by both CFTC and SEC, among other agencies, I think would be helpful. So back to your point, it is probably a necessary part of the maturity process, but hopefully one that can find a bit of a fast track, because it certainly has attention today. And I'd rather see things worked out in the halls of Congress and through the actual application of the laws as opposed to just in the court of public opinion.
I think that's a pretty good place to leave it for this week. I like that we ended on maybe a pseudo positive note. It will be interesting to see how much support this garners, because to your point, Jason, it is just a draft and it was just released. So something definitely to monitor moving forward. And just a quick housekeeping announcement. We do have a really fantastic recording interview with Jason, Jack, and Parth with Maggie Love, the co-founder of SheFi, talking about education, the need for education and inclusion in the space, and many other great things. So that'll be released wherever you get your podcasts on Tuesday, including Spotify and Apple. So definitely take a look out for that. And I think that's it for this week. Thanks, guys, for a great discussion. I'm sure there's a lot that we talked about this week that will be ongoing for quite some time. So we'll be monitoring it closely. See you. Have a great rest of your day.
Thanks, guys. See you later.
Digital assets are speculative and highly volatile, can become illiquid at any time, and are only for those investors willing to risk losing some or all of their investment and who have the experience and ability to evaluate the risks and merits of an investment. Past performance is no guarantee of future results. This podcast was produced by Fidelity Center for Applied Technology, also known as FCAT. FCAT does not offer digital assets nor provide clearing or custody of such assets. It is for informational purposes only and is not intended to provide tax, legal, insurance, or investment advice and should not be construed as an offer to sell, a solicitation of an offer to buy, or a recommendation for any security or other asset by any Fidelity entity or any third party. Views expressed are as of the date indicated, based on the information available at the time, and may change based on market or other conditions. Unless otherwise noted, the opinions provided are those of the authors and not necessarily those of Fidelity Investments or its affiliates. Fidelity does not assume any duty to update any of the information. Fidelity and any other third parties mentioned in the podcast are independent entities and not affiliated. Mentioning them does not suggest a recommendation or endorsement by Fidelity. This information is not intended for distribution to or use by any person or entity in any jurisdiction or country where such distribution or use would be contrary to local law or regulation. Persons accessing this information are required to inform themselves about and observe such restrictions. Third-party trademarks appearing herein are the property of the respective owners. All others are the property of FMR LLC. Copyright 2023 FMR LLC. All rights reserved. 1040156.